Stupidly easy way to make Canadian homes affordable again. Housing affordability in Canada has become a crisis, especially in major markets like Toronto, Vancouver, and increasingly, Hamilton and Ottawa. Home prices have surged far beyond what average Canadians can afford, creating a barrier for first-time buyers and families looking to settle down. Many people compare this situation to the US, where institutional investors, large corporations and private equity firms own tens of thousands of single-family homes. This concentration of ownership drives prices up and reduces the supply of homes available for ordinary buyers. In the following ReVenture Consulting video clips we are about view, the presenter explains how, in the United States, limiting institutional investor ownership in residential housing can directly impact prices and affordability, essentially returning balance to the market. Canada's market is different. Institutional investors do not normally own massive numbers of single-family homes. Most residential properties are still held by individual buyers or small landlords. But here's the critical insight: even in Canada, restricting the number of single-family homes that investors can purchase could have a huge impact. By reducing investor competition, more homes would remain available for Canadians who actually want to live in them, rather than be bought up as investment assets, which drives up the prices for these homes and creates skyrocketing and unsustainable demand. This potential Canadian restriction could drive down prices, slow the pace of runaway housing costs, and make homeownership more attainable. Let's look at what has just been proposed for the U.S. housing market.
Big news, everyone. Trump just announced that he's taking immediate action to ban institutional investors from buying single-family homes in America. He just posted this on Truth Social. It's now all over the news. The question is this actually going to happen? And if it does, what's the impact going to be on the U.S. housing market? Well, the first thing to understand about this, everyone, is that number one, it needs congressional approval to happen. And number two, we still don't know the exact specifics. However, if it happens, we could see big institutional Wall Street investors like Invitation Homes, American Homes for Rent, First Key Homes, Progress Residential, Tricon Residential, kicked out of the housing market. These investors own tens of thousands of homes, and by some estimates, institutional landlords own anywhere from 500,000 to 1 million houses across America. And so if we ban them from buying, it could have a big impact on short-term demand in the market and where prices go. In particular, I'm expecting that if we ban investors from buying houses, we will see home prices drop in metro areas like Atlanta, Phoenix, Las Vegas, Nashville, Tampa, Charlotte, Dallas, and Houston. These are areas that are havens for the big Wall Street institutional investors. They buy up lots of homes in these cities. For instance, if you look at American Homes for Rent's ownership portfolio, you can see that 45% of their homes are owned in only 7 cities in the Sun Belt. At the bottom of the last housing crash in 2012 is the first time that we saw investors build up capital and deploy it into the market. Blackstone was one of the first to do it, and they eventually spun off Invitation Homes as a publicly traded REIT. Invitation Homes owns around 76,000 homes across the US. Their stock is down 6% today because of this announcement from the Trump administration. So we're already seeing Wall Street react. Invitation Homes is down 6%. American Homes for Rent, the other big Wall Street landlord who's a REIT, is down 4 to 5%. Even D.R. Horton, the big home builder, is down 3 to 4% on this news. And so this begs an interesting question, everyone, and I'm seeing some debate about this. Is this actually a good idea? Is banning the institutional investors from buying homes a good idea? And how is it going to be enforced? Well, I polled you guys and I asked you the question, do you think corporations should be banned from buying houses? And the response was overwhelming. Over 80% of you think corporations should be banned from buying houses here on this poll on YouTube, which already has thousands of responses. I ran a similar poll on X. Over 70% of my X followers think corporations should be banned from buying houses. So this is a nonpartisan issue, it seems like. Both Democrats and Republicans seem pretty uniform, both sides of the political aisle, as well as independents, in thinking that corporations should be banned.
Canadian governments and politicians realized years ago that housing affordability was out of control in Canada. Back then, Canadians trying to buy or rent a home were already being pushed out by giant corporate investors and real estate investment trusts, not just by market fluctuations or government policy. Almost 4 years ago, the Member of Parliament in this upcoming CTV News video clip explained how affordable housing has been systematically targeted, federal operating grants weren't renewed, tax rules rewarded corporate landlords, and buildings that could have stayed affordable became prime targets for investors. They also highlight how both Liberal and Conservative governments failed to stop this trend, letting the problem grow year after year. As it became more profitable for corporate investors because of increasing rents, real estate, including rental properties and homes intended for single-family homes, exploded in value. And while politicians acknowledge the crisis, real action to protect affordable housing or curb corporate profiteering has been slow to non-existent, meaning Canadians today are facing the consequences of inaction that started long before the pandemic. Here's what this Member of Parliament was saying about 4 years ago.
Canadians that are trying to either buy their own home or rent an affordable home, or in the case of Peggy, trying to stay in an affordable home, are all getting kicked in the teeth. And they're getting kicked in the teeth because the market has been set up not so that they can be competing with families in like situations with similar incomes, but so that Canadians that want to find their way into a home are having to compete or take on deep-pocketed corporate investors. And that's what's structurally wrong with the Canadian housing market. There are people out there that'll tell you different things about that. The Liberals so far have only been willing to take action in respect of foreign buyers, but we know they only represent about 5% of the market. Conservatives will tell you it's government spending, it's the Bank of Canada, it's anything that they can say that will cause people to look away from the real problem, which is giant corporate profits that have been made by turning what should be a market that's about people getting their family home into an asset class to make money on. And that's not something that's happened simply by accident. That's something, if you look at the history of real estate investment trusts, what you'll see is they started taking off in 1996, which, as it happens, was right after the Liberals canceled the National Housing Strategy. And they've been gaining steam since then. It doesn't serve Canadians' interest to only look at the last 2 years and what's been happening in the housing market over the last 2 years during extraordinary times. The trend line for Canadians getting pushed out of affordable homes starts much earlier than that, and it spans across Liberal and Conservative governments alike, who have not been doing enough on the supply side, but have also fostered a culture in the tax code that rewards companies for doing exactly what's happening to Peggy, coming in and buying affordable buildings with affordable rents, rent-evicting the tenants, and jacking up the rents. They've done that through the tax code because if you're part of a real estate investment trust, you don't have to pay any corporate tax on your profits. As long as you're paying out the money that comes in to individual investors, they just pay tax as individuals, whereas normally a company would first pay corporate income tax on its profits and then pay its dividends out of what remains. The other way that Liberal and Conservative governments alike have encouraged this broken culture in the housing market has been by not renewing the operating grants that were tied to many affordable buildings, whether they're co-op housing or nonprofit housing across the country. There was federal operating money to make those units affordable, better than affordable, actually rent geared to income, which is the gold standard for affordable housing, ensuring that tenants aren't paying a disproportionate amount of their income on rent. So, because those operating grants were tied to the mortgages, and they were 40 or 50-year mortgages, those mortgages began to expire around the end of the Harper government's term. They said that they would not renew those operating grants. The Liberals ran on a commitment to save them and then didn't do it. What that means is that we have buildings across the country that traditionally have had federal operating money to ensure that they could provide affordable rents to their tenants, that have been told by Conservative and then a Liberal government, we will not renew your funding. And what's that meant is that they either have to jack up the rents themselves or they have to sell their building. And that makes them a plump target for real estate investment trusts that see a building that can no longer sustain itself. they have the cash on hand, so they can come in, they can outbid all of the nonprofit associations with experience in housing that would love to acquire buildings like these and continue on a nonprofit affordable model, but they get beat to the punch by real estate investment trusts that have more money on hand and can bid higher. So this is a problem that has been brewing for a long time. It's one that's coming home to roost. The pandemic obviously made it worse, and we can talk about some of the reasons why that is, but I think politicians and other parties are kidding themselves if they think that it was just government spending during the pandemic that has led to this crisis in the housing market. It has been building up for a long time. It is now acute, and we need to do something to cool off the market and save what we can of these affordable units. We're being told by experts that for every 1 unit of affordable housing that we build in Canada today, we're losing 15. That's not sustainable. And it's not even a drop in the bucket in terms of new supply combating the loss of supply. And real estate investment trusts and other giant corporate landlords are at the root of that problem. We need governments to address that problem if we're actually going to maintain affordable housing for Canadians.
According to John Burns Consulting, there's 14 million single-family investment rentals in the US right now. 14 million, which is a lot. That's 14% of the housing stock. There's some other estimates that say the total amount of investor-owned homes can go up to 24 million if you include condos and other property types. So it's a lot of investor-owned homes, significant amount. However, if you look at the ownership breakdown of the investor-owned homes, it is mostly mom and pop ownership. Mom and pop ownership, less than 10 units, is over 80% of all the investor-owned homes. So if we squarely focus on just the corporate investors, are we missing something here? Like, are we only maybe just kind of doing a surface level change in policy on the housing market? Instead, do we also need to focus the gaze on the mom and pop investors or the investors that own 10 to 100 homes? They own a majority of the US housing stock. And one thing I would actually suggest to the Trump administration is that this banning of corporations should be your leading salvo here. This should be your opening act. But I think there should be more that follows it if we want to really get serious about deterring investors from buying.
As we just saw in the previous clips, there's a clear link between limiting investor purchases and improving affordability. While the US experiences this on a massive scale due to huge corporate landlords, Canada could achieve similar results on a smaller scale, but with equally significant benefits. Imagine if policies were introduced to cap the number of single-family homes any investor or corporation could own. Suddenly, the market would shift. More properties would be available for families and first-time buyers, and price growth would slow. The focus would move back to actual Canadians seeking homes, not investors treating houses purely as financial assets. This isn't just theory, it's a practical, actionable approach that could make homes more affordable, stabilize the market, and finally give average Canadians a fighting chance to own a home in cities where affordability seems out of reach. By combining thoughtful policy with market awareness, we could see meaningful change, without waiting for the market to correct itself on its own. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.